So, ladies and gentlemen, without any further ado, I'd like to now invite on stage our eminent speakers for the session. Ms. Amishi Kapadia, Joint MD and CEO, Yes Securities India Limited. Mr. Gurmeet Chadha, Managing Partner and CIO, Complete Circle. Mr. Naveen Philip, Managing Director, Popular Mega Motors India Limited. Mr. Sanjay Thakker, Chairman and Executive Director, Group Landmark. May I invite Mr. John K. Paul in place of Mr. Naveen Philip. And I'd also like to extend a very warm welcome to our session moderator. Ladies and gentlemen, we are pleased to have with us Mr. Parikshit Luthra, Chief of Bureau, CNBC TV 18. A very warm welcome to our eminent panel here. So without any further ado, I will now hand it over to our session moderator, Mr. Parikshit Luthra. Over to you.
Thank you so much for joining us, ladies and gentlemen. I'm sure it must have been a tiring day, but very enlightening as well, going through so many panel discussions. And this has really been automotive week, so to say. We've had the Auto Expo in Greater Noida. We've had the Auto Components Expo, which has begun in Pragati Maidan. And Federation of Automobile Dealers, they put up a stellar show. So first of all, a big round of applause for the Federation of Automotive Dealers for putting up such a strong show here at the Taj Palace Hotel. So let's kick this off, because the events over the last 2 months, especially with Landmark going on the stock market, going for its listing, has made a lot of us really think as to how automotive dealers, automotive retailers can unlock value. So let's kick this off with Mr. Thakker. Mr. Thakker, you know, in India, and we have been seeing this over the years, the relationship between an automotive retailer and an OEM is so skewed in favor of the company. How, when you were thinking about an IPO, what was the broad strategy that you had in mind? What did you really want to achieve from an IPO?
You asked, hello?
Hello.
Is this?
I think we need to work on the mics.
Hello.
Hello?
Try this one.
This.
Hello. Yeah.
Yeah. I think with my voice, yeah. So these many things you need to do for the IPO. Now, jokes apart, you asked many questions in one question. So what was I thinking? When did I start thinking? What really happened? So when we started in 1998, I don't think we had this in mind that we will IPO. But when TPG invested in our company in the year 2014, I think this was written on cast in stone, this was written on the wall that we will do it. It required a lot of self-belief. It required a lot of going through turbulences during the years of 2015 to 20, then the COVID years. And then we had to kind of do it, and we did it. We persevered and we kept faith in the system. There are more dealership chains listed in America and in China, in South America, in Europe, and it really was a surprise to me that India, third largest auto market, and we didn't have a single one. You spoke about the skewed relationships of the OEs, and that is a contentious statement. I think there will be people on both sides of that statement. What benefited us was that our structure was that Mercedes-Benz was our holding company, or at least that's what we made it to make it IPO ready. And I haven't seen any OE who has been so proactively pushing for the IPO. I mean, what I'm telling you over here is that not only were they supportive, they went out of their way to see that this really happened. And we spoke about retail of the future. Santosh was here and there were some discussions about what is happening. So there are organizations which are looking at the future. There are organizations which are looking at the past. And there are organizations which are living in the present. Now, depends on who you are partners with. And yes, your fortunes are written by that one thing a lot.
No, thank you for those opening remarks, because a lot of your dealer partners, a lot of the automotive retailers sitting here would be looking at you and Mr. John Paul. Mr. John Paul of Popular Vehicles, we believe, will also be going for an IPO soon. And people will be looking at your example very, very closely. But before I get in Mr. Paul, let me get in Ms. Amishi Kapadia. Ms. Kapadia, give us a sense of what bankers are really looking out for. This has been a turbulent year ever since the war began and 2 years of the pandemic. Probably not the best time to have an IPO. Landmark has had a decent start, a good start. But when it comes to automotive retailers going public, what are some of the factors that you would look at?
Thanks, Parikshit. I think you're right. This year has been not so great year for IPOs compared to the kind of money that got raised in 2021. This has been kind of a washout. But having said that, investors have always favored companies which have had good governance, good track record, good management team in place, and certain things on why we should look at an IPO would be, obviously, you're getting money for growth capital, or you're looking at a private equity exit, that's something that Sanjay just spoke about, or you're looking at succession planning. You could be looking at unlocking value if you're part of a conglomerate, or it also could be that once you get listed, the kind of brand visibility that you enjoy in the markets, particularly if you're looking at doing some more international tie-ups or your vendors or distributors, or you're also looking at widening your investor base. You could also have your employees becoming a part of having ownership in the company. All of these reasons somewhere, and having good corporate governance, because your perception in the market changes immensely once you're listed, because you have to comply on the regulatory front. And those perceptions also reflect in your stock price eventually. So looking at the year and looking at what as a banker we would look at if you're looking at an auto dealer, I feel that the auto dealers are a proxy to the Indian auto market, and investors will look at the auto dealers because they do want to have a play in the industry growth phenomenon that is going to happen. Looking at the auto penetration in India, which is one of the lowest in the emerging economies, the growth is going to be immense. We have aspirations of owning a vehicle, the shift that is likely to happen. I think the growth in the industry is going to be immense. And some of the things that, Parikshit, as a banker, we would want to guide that investors do look at is obviously your profitability, your sales, your service, and your spare parts. It's the SSS that is usually focused on. So that's what I would say.
Right. Thank you. That's very crucial advice coming from one of the top bankers in the country. But Gurmeet, coming to you, do you think automotive retailers need to rethink, especially in India, where we don't have so many companies in the retail space, in the auto retail space, going for IPOs? Do you think it's time to rethink the way you do business?
I think it's in every sector, Parikshit. I mean, it's not just, in fact, I think our entire focus when we discuss to go public is valuation. We start wrong. Valuation is the output, right? We have to start with the input, right? Now, to have solid books of accounts, booking revenues, Sanjay made that point on companies in the past and companies thinking about future. Great transparency, very clear contracts, having clear policies, solid management, professional management, and most importantly, willingness to give up control. This is where a lot of Indian entrepreneurs, get emotional about their businesses. Now, whether you go public or not, these things are still required. If you want to be relevant, these things are still required. After that, once you go through that process, whether you want to unlock value or not, that then comes the later part. Even if you're not going public, and even if you have to run the business successfully with the kind of disruption we have, these things are paramount. So I think that is, in my view, the approach has to be 360 degree. Second, I think I think this auto dealership also is a term which needs to be reinvented. We are a point of a milestone in somebody's life. You know, there are 2 crore two-wheelers guys who want to upgrade to car. There are Maruti owners, or there are owners who are in the entry segment who want a premium car. A luxury car is the milestone event. It tells you that probably you have achieved something in life. So I think to me it's a milestone marketplace, and not just the way we need to look at this business. And as I said, think differently. So it's not that they have just come up with the IPO. Look at something like a car trade, which was marketed as a tech play, right? 55% sales are through Shriram Automall, right? Which is offline, which is second-hand cars. So I think the way you can make revenues more stable, think about future, think about tie-ups with EVs, work on digitization. I was seeing their landmarks, DRHP. They went micro on revenues from service and spares. They had the investments in, a lot of startups. They had a tie-up with, am I audible? Yeah. They had a tie-up with Pitstop. You can think about future, which is EV, right? So I think you have to continuously think and reinvent yourself. And I think this industry is going to explode as we journey towards 5 and 10 trillion. It's up to us whether we want to participate or not.
You know, and you've really made me think, Gurmeet, because the industry today is going through a disruption in technology, a disruption in the way cars, two-wheelers, three-wheelers, commercial vehicles are going to be sold. Whether you want to have so much of inventory, whether you want to go for a direct selling model, whether you want to be in multi-brand retail, e-commerce. Mr. Paul, we'd like to ask you to give some tips to your dealer partners, dealer friends here in the auditorium. What are some of the opportunities that you see beyond your business currently in automotive retail, in leveraging your customer base? Sir.
You said, what are the opportunities that you see before you? Okay, I'll just start from the beginning. I would like to say this. That is, when we incorporated our company in '84 with the first dealership, that was a Maruti dealership, the company was a public limited company. The idea was, at some time, we should grow to a level that we can go public. So we've always had that vision that we must grow. And it was not about running a dealership, running it more efficiently, or just sticking to one dealership. But that we had decided that there is a scope in the dealership market where you can build a big corporate on various dealerships. And we expanded beyond our own territories. I mean, from just one city, we expanded to other cities, we expanded to other states. So, and within a year or two from when we applied for the first dealership, that was a PV dealership, we then applied for a commercial vehicle dealership and for a two-wheeler dealership. So today, the used car business can be taken ahead in a big way. Right now, the used car business is already 1.3 or between 1.3 to 1.6 times that of a new car sale. In the US, it is around 6 times. And 96% of the new car sales in the US is done on exchange. It's only 6% where the sales is done without exchange. So the opportunities are immense. And to understand the opportunities, you must be willing to expand your vision. We, as FADA, take out a delegation to go to NADA every year. The idea is to see what new things are happening. You don't have to reinvent the wheel. We can try and learn from the other markets, especially the US market, where all other countries land up, all the associations from various countries, especially South America and Europe, they all land up there. And you can always get new ideas of what is happening. And they are about 4 to 5 years ahead of us. So you just have to pick up ideas and start developing them. So there are a lot of things that we can learn. And when you talk about a dealership, you should not just talk about, I have one dealership, I'm happy with that dealership. As Gurmeet said about willing to give up, see, you should look at what you want to do. Do you want to just run a dealership, or do you want to build a big organization, build a big organization for the future? If you want to do that, you have to think like that. You have to just keep expanding. So there are people who have asked me, when do you go for a new CEO? Is it you or go for a CEO? The time when you can't do it alone, you need help, you need professional help, you need new ideas. Then you go for somebody who can bring in new ideas. Something that you may find difficult. So in that, if somebody or some people with new ideas or different ideas come in from different industries, they're going to expand your thought process also. So that's where you can bring in and expand and go public at the right time. Just because somebody has gone right now doesn't mean, okay, we are too small. No. You think of how you need to expand. You don't have to expand just to grow big and go public, but if there's a scope, you must do it.
No, thank you. Thank you so much for that piece of advice, that we need to think beyond our business. We need to think big. You can't just think about, fine, you have one dealership or 3 dealerships. You really have to think about growing your organization and even ceding control, as Gurmeet said. But Mr. Thakker, if I can get you back in, I'd just like to take that forward. Mr. Paul listed one big opportunity for automotive retailers, and that is the used car business. Bang on, the used car business is going very strong. We're looking at a chip shortage. There's a shortage of cars. People are also holding on to purse strings at the entry level. So yes, used cars is a very strong option right now. But what about multi-brand retail? What about e-commerce in the car business, in the two-wheeler business, in the three-wheeler business? What is the opportunity that you see there?
Just as John is a little allergic to when somebody calls FADA, I want to call our business as auto retail business and not dealership business. Now, the reason, and I say this with some amount of experience, the moment you utter the word dealership, you destroy some value. We are into retail business. Retail in India is understood to be going to grow exponentially. The word retail in India sounds sexy. That's something which is a no-brainer. Landmark, for example, is in luxury retail. Some people sell watches, some people sell cars. That's the first point. The opportunities, John rightly said about the used cars, I can add several more of them. And there is no dearth of opportunities for people. The data that you mentioned about, finance business, refinance business. Can you also become an NBFC? So many people are taking finance. Do you have the customer base with you? Can you partner and share risks with some people and do leasing business? Can you write extended warranties yourself? Can you get into some white label products with insurance companies? I can go on and on. Every aspect, everything that we do on a daily basis, we are into the retail business, and there is so much opportunity. Let's think out of the box.
Right. No, that's important, because yes, there are some very large established OEMs in the country, but there are so many which possibly cannot take off on their own. Ms. Kapadia, do you see that as an opportunity? There are so many European car makers coming into the country. There are so many small startups which are launching in the EV space. Do you think they need the support of automotive retail companies to take their case forward?
I would say that yes. Now, you had earlier asked a question about online and offline, right? We are talking about offline here. But some of Tesla's, right, is looking at a B2C model. And so your question would be that would these new entrants look at a B2C in India? Well, I would give you an analogy of the business that I am in the brokerage, right? When we had COVID, we had a lot of online brokers who started business and were flourishing because a lot of investments happened online. But the offline business still continued. Why? Because people still wanted to talk to an advisor, wanted to understand what that investment pertains to, what kind of returns will come in, and wanted clear advice in terms of where all they can invest. I would draw the same analogy where cars and the OEMs and the auto retail is concerned, that though there could be a B2C model that some of these newer OEMs could adopt, I still feel the offline is here to stay, because buying an auto still has a feel to it. You still need to want to do an emotional touch to it. You still want to do a test drive to it. You still want your dealer to help explain what are the features. And it's not that everyone reads online and goes to the dealer, right? They also want that experience there. So the offline is here to stay for a very long time, though the B2C might take off. That's what I would say.
Right. Gurmeet, to ask you, do you get a sense that going ahead, retail investors will be very interested in automotive retail companies getting listed on the stock exchange? Is this a business that is being looked at very, very closely?
Oh, absolutely. In fact, investors look at anything which offers value. It doesn't care it's a steel company or a automotive dealer or a retail company. And I think, I have this privilege of dealing with Mr. Suri. He's in the audience for last 10 years. And I probably understand this business because of probably being associated with him. So I think sometimes in the big idea, so I agree, used cars is an opportunity, cross-sell is an opportunity. Sir made that excellent point. I think car lease is something which in US, a fifth of the cars sold are on lease. There's a startup which is working on recharge. You can recharge car like you recharge your SIM, right? For a certain kilometers on a car which is preloaded, right? So there are a lot of things which will evolve. Also, sometimes we forget the micro things. How to make your service centers more productive. Higher quality people. So if you're in a luxury, so he made that point, if you're a Mercedes or a BMW dealer, it's a luxury marketplace. How can I cross-sell other luxury brands there, right? So make that service center productive. Today, car, 5 years back, software was 10% of the cost. Today, it is 26%. By 2025, as per a survey by NASSCOM, 55% cost would be software. Hire better people, right? Get your HR policies, in order. The people interfacing with people, because they're using now supercomputers and not cars, has to be very different. Right? So prepare for future and anything which adds value. As I said, we value businesses where customers come to you. This is one place where customer comes to you because it's a lifestyle event for him. It's a milestone event for him. It's up to us to make it, as productive as possible.
Right. Mr. Thakker and to Mr. John. Now this question would be, for example, the capital that you've raised through your IPO so far, how would you like to allocate it, use it to grow your business in the next 2 years, if I would say?
Yeah, so initially, since the cost of capital is high and interest is rising, and immediately that had to stop, we have paid back our working capital loans. The banks aren't very happy by that move, but 30% of what Landmark is today is by way of mergers and acquisitions. Now, I think that answers the question, and I'll pass on the mic to him.
So you mean to say you would be looking to acquire certain brands, certain EV makers maybe?
Yeah, my sense is that there is, though we are talking about everybody kind of going or should aim to do IPO, my feeling is that there would be, I'm just gazing into the future, which is not ever a good idea, but I am doing it, that there would be 4 or 5 chains which will emerge. I don't see everybody going public. The public markets won't take so much of paper initially. And the smaller and mid-sized dealerships would be better off actually if they were to kind of merge with and make a larger entity. That's the way I look at the future.
Right. Especially as we see electrification growing very strongly. Mr. Paul.
See, I would like to say one thing, that today, all dealers here, other than selling vehicles, will also be doing service. Okay. But our highest revenue is not exactly from service. It's from body shop. Most dealers would be doing a ratio between body shop and service of around 10 to 12 or max around 15. Okay. We do around 22 to 23 times, percent of that converts to body shop. And it's not about accident repair or such, it's basically body shop work where the margins are better, but nobody focuses on that, and that no manufacturer stops you from doing it. There may be other restrictions, you can't sell outside your territory and all those things. But in these areas, there's nobody. Plus conversion of, renewal of insurance and finance and all those things. Those are all in our hands, where we can immediately do. And the question that you asked is we can expand our body shops, we can expand our service stations. All that is where we would like to focus on.
Right. Ms. Kapadia, coming back to you, give us a sense, and I think this is something that a lot of our automotive retail companies here in the audience would like to know. What is the kind of scale that your business should have so that you can consider yourself ripe for an IPO? It's a long way off. The businesses that we see, which are going for listing or who have gone to the stock market, they have really burnt a lot of midnight oil. They spent years in the business. But what is the kind of scale that you need to look at?
I would say that, it's very important that you have a dominant leadership position in the largest procurement pockets, right, in India. That's something, because that is something, whether you have a multi-tie-up or you would just have a single brand. But usually investors do prefer a multi-tie-up because of the fact that the shifts in the macro can get insulated, right, whether you're in the premium economy or the premium segment or in the economy, the kind of diversity that you have will help strengthen your position. But you're talking about the scale, that's again very important. Consolidation is something that I think Sanjay was talking about, because that basically gives you the strength of numbers. When you're going public, the public market investors look at your market cap, right, your valuation at what you're going to eventually get listed at. And that, again, translates into kind of the multiples that probably are there in the listed space. Usually, the back of the envelope calculation is that, your market cap should be 1,500 crores, 1,000 to 1,500 minimum for public market investors to invest, because otherwise they have a liquidity issue in terms of when you're buying or selling once you're listed on the stock exchange. So, SEBI anyways has an eligibility requirement that when you're looking at an IPO, your dilution should be either 25% with a market cap of at least 1,600 crores, or you could look at a 400 crore size IPO, which has a dilution between 1,600 crores to 4,000. And if your valuation is above 4,000 crores, you need to only dilute minimum 10%. So that is in self taking care of the kind of scale that one has to look at, because whenever you're investing in a listed stock, right, you look at mutual funds or you look at FIIs or insurance companies, when they take up a substantial stake, there are times when they would also want to sell. And if your stock is not liquid because your market cap is too small, then it becomes a deterrent for them to invest in the IPO itself. So reaching a certain scale is very, very important. Your growth strategy, which markets are you having a dominant market share, your, basically your stability of earnings, all of it plays a role in terms of determining what is the right size for the IPO then.
All right, those were the real critical points that bankers would be looking at in case you're ever considering an IPO. But Gurmeet, coming back to you, as Mr. Sanjay said, there are different models in the market. Yes, several dealer company relationships are skewed in favor of the company, but then there are several companies which are very, very accommodating. We've just heard about MG Motor agreeing to a model dealer agreement, and we've been hearing reports about that as well, but that's far and few in the industry. How can an automotive retailer establish himself or herself as a brand in the industry? Because currently, automotive retailers are known through the companies that they sell vehicles for, they service vehicles for. How can they themselves stand out?
So multiple ways. If you have the balance sheet strength, you can do it organically. Become multi-brand, add more outlets, compete instead of competing, collaborate. You can figure out like-minded people. The world is more of collaboration now. There are marketplaces which are collaborating and not competing necessarily. Second, think of, as I said, you are customer facing with huge infrastructure. You have influx of people coming to you. He made that point on how productive the service and the body shop was. A popular, Landmark made that point of revenue per vehicle service being 21,000 in the DHP. So it's about more content per car, more content per service. Look at last 5 years, Parikshit. Sad year for autos in terms of appreciation, right? Maruti, even M&M, despite the recent run-up, Motherson Sumi, Bosch. And there was a company, Minda, where market cap went up 15 times in the last 5 years because the kit value per car went up from 2,000 rupees to 35,000 rupees. They figured out alloy wheels, they figured out airbags, they figured out car seats. So add more value on every time the customer visits you. Add more value every time customer interacts with you. And I think rest everything will be taken care of.
Right. I'm going to take the final set of questions, but I'm going to take some questions from the audience as well. And we have Mr. Gopalakrishnan here, Vice President of BYD India. If you can give a mic to him as well, because we'd like to hear from an OEM point of view as well. So, sir, thank you so much. We have been talking about how to grow automotive retail businesses, the road to a public offer. Give us a sense through the experience of BYD and some international examples of what automotive retailers in India can really do, some of the opportunities that can be possibly looked at.
Thank you. I think congrats to Landmark Group and Mr. Sanjay Thakker for a very successful IPO. Yeah, they are our partners. They recently became partners for the last 1.5 years. I think automotive retailers in the industry, most of the successful dealer businesses which I have seen in the last 25 years have been doing a lot of things. I think one of the biggest important things which I have learned over the past years, the personal involvement in the business, that has made them successful. Whether you take Landmark Group, Popular Group, whatever you name some of the successful groups, then that has been the key for a very successful operations over the last 25 years. I have seen many groups fall away because of various reasons. So I think they have taken every opportunity out, I think, and doing customer satisfaction. I think serving the customer is the best, because once the customer is satisfied with the dealer group, auto retailer, then he comes back again and again for more businesses. Whether he wants to renew the insurance, finance, or even service, service, yes, revenue is there. They come back to the workshop because they feel that the retailer is treating him very properly. Even when I am a car buyer, I go to a particular retail outlet because he treats me differently from a different retailer. So I think that's very important. So I think once you satisfy your customer, he gives a word of mouth. That also becomes very important for the group to grow. So I think these are some of the key points, and I've seen many groups where the owner or this CEO is involved personally with every aspect of the business, and of course manpower retention. And I can say some of these successful groups have retained their man for the last 25 years. I can actually name some groups where when I started my industry in 96, 94, I have seen those guys grown into CEOs, MDs of that same group. I have seen many of them today also. So I think that is one of the key points for any automotive retailer in the country.
All right, thank you, Mr. Gopalakrishnan. Those were great views. And now we'll just sum up our panel. It's been a great evening and a great discussion. Let's get closing remarks from all our panelists. Let's begin with Mr. Paul and Mr. Thakker.
Uh, I heard today that it was 17th September that we are going to be celebrating the FADA, the Auto Dealer Day. 19th, sorry. So I would like to kind of say that 23rd December, when Landmark listed, should be the moon landing day, the landing where when Neil Armstrong, I think when he took that step, he said that one step and giant leap for mankind. Now I want Landmark to be remembered as some organization which opened the doors for a lot of people who are in this room and who are not in this room. So let this also be written down as an important event in the auto history of India.
All right, let's have a word from Mr. Paul.
No, after Sanjay has already made the landmark, I can't make it much bigger.
You can be popular in that.
Okay. No, why not? We shouldn't be much smaller. We should be probably bigger than landmark would probably be what I would like to say. But if it goes through, because we already had a year, our time limit was up, so we've just got to refile again probably in another 4 or 5 months, or probably 6 months after the year. So we'll have to wait and watch, but there's no question of not going. We will be going forward.
All right, a big round of applause for Mr. Thakker and Mr. Paul, both of them showing the way to automotive retailers across the country. Ms. Kapadia.
As a banker, I would say that there is a new set of companies that we are really looking forward to taking them public. I think that a time is an opportune time. It's about just getting our facts and figures correct. And I think with Landmark setting the ball rolling, we will see some hugely successful IPOs in the auto retail sector soon, and I'm very hopeful, and that's what I would wish all of you the very best.
All right, Gurmeet, any final thoughts that you'd like to leave us with?
No, I had a great learning actually, sitting with both the promoters here, and I think, and he made that point of satisfied customer, bringing more new customers. I think just keep adding value, and hope to see more people here next year monetizing their business, growing their business. And I think the industry is headed for a very purple patch, and I wish everyone all the best.
All right. Thank you very much, everyone in the audience, for joining us. Ms. Kapadia, Mr. Thakker, Mr. Paul, and Gurmeet, thank you very much for being with us, and have a great evening.
Thank you, speakers, for such an invigorating session, and we have gained great insight for the right step towards public offer. And now it's time to felicitate our speakers, and to do the honors, may I please request Mr. Ashish Harshraj Kale, President FADA, and Mr. Sabu Johnny, Managing Director EVM Automobiles, to please come on stage and felicitate our speakers and session moderator. Thank you, gentlemen. Have a group photograph together.